Well, 4 trading hours left in 2011, and it is down to the wire for the S&P 500 on the cusp, 1257. That's the break-even number for you. Call it Cassoni's crystal ball. Our expert panel forecasts the economic year ahead. And Verizon getting called out by consumers over a controversial new fee. I'm Cheryl Cassoni. Fox Business at Noon starts now. Okay, actually, Susan and Ed, stay with me. I want to get a couple more predictions from you, but I do want to bring in James Frischling. He's here for the hour. He's also got some things in his crystal ball. He's, of course, the co-founder and president at NewOak Capital. All right, stocks. 2012 for the stock market. What do you see, Jim?
Well, again, I think for all the volatility we just witnessed in 11, and for all how unchanged we are, and how important dividend-paying stocks became for 11, because that's really the only return you got. Unfortunately, I think that's the theme we're going to see for 2012. I think a lot of the headwinds and challenges that are out there, and kind of, I guess, the market had to deal with in 11 are going to still be there in 2012. I think 11 was a good year. I don't think breaking even should be deemed anything less than, I think, somewhat of I don't want to say heroic effort, but a lot of body blows facing these stock markets, and I think they hung in there very well. I think the financial hole, or the challenges that the financial crisis left, were still somewhat underestimated. The disappearance of the securitization market. So again, I'm actually pleased with 11, and my themes for the 12 are somewhat consistent: dividend payings, franchises, somewhat defensively oriented, but you got to get some dividend yield in there.
And we're going to get some of your picks later on in the show, but real quick, everyone seems to think that 2013 is the big year, whether it's for housing or for automobiles. What about for stocks? Do you think we're going to have to wait a year to actually get some real moves in the markets that we can actually profit from?
Well, I certainly think the guest was talking about housing is an interesting situation in terms of it's housing, it's jobs, it's jobs, it's housing. They very much feed off each other. And I do think that 2012 is going to be a grind out year. So I don't disagree with those thinking that there's a better opportunity, or rather there'll be better days ahead in 2013, because I think that's how long it's going to take the euro to work itself out, and to a certain extent housing and the job recovery, I think, is important. And again, I think that position just better for 2013, but hey, we still got to battle through 2012 next.
Well, Susan, here's that thing. He brings up the issue of unemployment. That is the key to housing. That seems to be what we need to see strengthen in 2012
yes, exactly.
for housing to come back. But we're still projecting, economists, not we, but economists that have been surveyed by the Associated Press, say 8.6%, 8.4% throughout the year.
Yes, and of course that's key. If we have growth in employment, not just the unemployment rate, but actual numbers employed, that's going to be positive feedback into housing demand and then new housing construction. So there's a bit, not strong, but a weak positive feedback that could hit second half. And I agree 2013 is the year to look for any recovery. But you know that even recovery is going to be a slow slog because of that overhang of shadow supply.
All right. And real quick, Ed, when you were back on the show earlier in the fall, I think you gave me a 12.6 million annual return for car sales, for light vehicle sales. Are you kind of sticking with that number? Is that where we're at?
For 2011, yeah, I think it's going to end up at about 12.6, 12.7 for this year. Next year, we're looking at about 13.6, I think.
13.6. Okay, so we are going to have a little bit of a boost in 2012.
Yeah, we'll have a modest recovery rate for 2012, for 2012. But it's not like the two others have said. It's the same story in the automotive business. Mild recovery due to factors like unemployment and all those things.
Okay, Jim, last question to you here. We have had, what a year we have had in 2011. You had the Arab Spring, we had that huge earthquake and tsunami in Japan, a lot of volatility, and then, of course, the European crisis. Do we need to gear ourselves up for another eventful year for 2012, considering it's an election year?
I certainly think some of these geopolitical and extraneous factors played a big role in 2011, and I think you nailed a very good point in terms of what's going to happen in terms of Congress and down in D.C. and the rule setting and the regulatory environment in an election year. So I don't think we're getting a lot of help out of Washington, not to be critical, but I'm not looking for them to save the day, in which case we're going to have to grind this out in other ways. I know I keep using that word, but I'm telling you, this is going to be a fight for 2012. You're going to have to, weight the sectors that you believe are going to be able to withstand some of the pressures and some of the headlines you're going to see, whether it comes from Europe, whether it comes from a slowdown in China, and what comes out of Washington, D.C.
All right. Well, I want to thank Susan Wachter, professor at the Wharton School, Ed Kim, director of auto industry analysis at Auto Pacific, and Jim is going to be with me for the rest of the hour. Stock picks coming up. He actually got some right. He doesn't know which ones I'm going to bring up, but I'm going to bring them up. Anyway, It is time for the good, the bad, and the ugly. Joining me now, Phil Flynn is at the CME. Jim Frischling is back with me here in the studio. Adam Shapiro is up in the newsroom. All right, Phil, gold, the story, I tell you, of the week. Turning higher after 6 straight days of declines. Do we take this as a good today?
I think it is good today, and I'll tell you why. We broke a losing streak. I know how Indianapolis Colts fans feel today. But look at this. Think of this. Gold is one of the best performing markets of the year. Not the maybe #1, but they're right up there. With gold being up 2% today, that puts them up almost 10% for the year. And that's good news. And this rally is good for another reason. Why was gold selling off this week? We were all worried about Europe falling apart. We came back down. The euro came up today. That's good news. And I'll tell you another reason to start getting excited about gold. Forget George Soros being bearish. Forget that guy for a minute. We're going to get bullish again because it's time to get loony on gold. You know why, Cheryl? The Lunar New Year, and the Chinese, of course, they buy a lot of gold. And they may buy even more after that weak manufacturing number, because more than likely we'll see some stimulus from China in the new year. That should be very bullish for gold. So I'm very optimistic for a golden new year.
George Soros is bearish because he lost a ton of money this year, poor guy. Well, I mean, not poor guy, but, you know, he lost a lot of cash. All right.
Call me.
Yeah, exactly. Yeah, same here.
I know, I'm a bitter man. You know, what are you going to do? Yeah.
Jim Frischling, you've got the bad. And speaking of Europe, you've got some faith in Europe overall, but you don't like the banks over there.
That's right. I get to play in the middle here because I think the ECB is going to do what it takes to calm this crisis or stop it from raging further out of control, which will help stabilize and certainly prevent the banks from, let's say, failing. But it doesn't put them in a very good situation as a stock play or an investment play. If you look what happened at the U.S. market when the Fed flooded the system with cash, you just saw at the top of the show, I think you said financials down 17% for the year. Don't think it's going to be a good investment right now for banks over in Europe, but I do think the ECB will do what it takes to, again, protect the crisis from getting out of control further.
It's hard to figure out the banks because they have such a different financial system than we do here in this country, and that's always I think the challenge I find.
True, but the amount of money they're parking with the ECB and their inability or their lack of desire to lend to each other tells me I think they're going to be under some pressure.
Okay. Adam, I gave you the ugly today. I'm sorry. I'm sorry. But it's a great story. It's a great story.
You got to wonder if the people at Verizon are sitting there like, Smithers. You know, they just like play the evil music. They're going to charge customers $2 to essentially pay their bill. Now, there are details. It's only if you pay with a credit card or a debit card, and it's only if you just do it one time every month as opposed to setting up a continual payment plan. But, guys, didn't you learn from Bank of America? I'm trying to do an accent. I can't do it. Bank of America and Netflix. Why would you do this to your customers? Well, says Verizon, it's the cost of processing and all of that. Does anyone believe that? Are they smoking something you have to go downtown to buy? I mean, $2 so people can pay their bill. Is that where you go, Adam? I don't. I order in, but I don't do that either. Bad sarcasm here. But someone at Verizon is smoking something. They need to sober up.
All right, Phil Flynn, what do you think? You think Verizon's going to be the next Bank of America? I mean, come on.
You know, I think it's ridiculous, especially, look at these people. Most of the people that get into these contracts with Verizon are stuck for a year or two, and a lot of them only chose Verizon because they wanted their iPod to work or their iPad to work. You know, so I do think it's a little ridiculous, but I know why. I mean, you look at where interest rates are right now. They're not making anything on the float for handling the transaction. It's a little bit of a negative, but for me, it's not a good way to start the new year if you want to build your business.
And I believe, Jim, that Verizon is the one that plunked out all that cash up front for the iPhone 4S. So they've got a big cash deficit right now, right, guys?
I agree with Adam. I think from a customer relations standpoint, it's horrific. However, they still got the best service. And when you approach those iStores and they ask you want Verizon or AT&T, I hear a lot of people choosing Verizon. So they're trying to get away with it. But I agree. You watch what happened to Netflix and others, not a great move.
Adding that to Jim Frischling's 2012 predictions. All right, guys, thank you very much. That was the good, the bad, the ugly for today and for the rest of the year.